Alright guys, welcome back to the channel. So we're on lesson 4 now in the series, and hope you've enjoyed it so far. Hope you've taken loads and loads of notes. So far we've been over the principles and we've been over the concept behind the strategy and why it works and how we're attacking a trend in 3 different ways. And if you haven't watched the last 3 lessons, make sure you go back and watch those before you watch this lesson, otherwise this one isn't going to make much sense. But in this lesson we're talking about the final chance entry. So we're talking about capturing the moves still, even though we're on the market's running out of steam, the trend's running out of steam, and we're getting the biggest pullback, which shows deceleration. But the great thing about this is we're doing it in a way that gives us a real conservative entry, really tight stops for maximum reward. So although this particular entry doesn't pay off as frequently as the others, the reward to risk ratio is amazing. So you're getting a sweet spot on all of this strategy, and the ways that you use these entry techniques to attack one trend means you're getting the best of all worlds. You're getting the opportunity, which traders like to have, you're getting the reward to risk, and you're getting the positive the real high probability moves as well. And when you combine all of those 3, you're going to have some crazy profits. So get your pen and paper and enjoy the lesson.
All right, we're going to go into the 3rd and final entry technique into this trend continuation strategy. And I just need to explain something before we move on, because I know what people think is, well, hold on a minute. We've just learned about an entry technique that allows us to enter just as we touch the previous structure level. We've also learned about pulling into a kill zone to get a decent risk reward and then enter on a reversal candle. So surely if we're to pull deeper into this zone, we can enter a bit more aggressively. Well, there's a reason that I'd take a retest of structure in this zone, and it's because out of all of the entry techniques, this is the one that I execute least frequently. It has the least opportunities. And the reason for that is because if we're pushing all the way down to the previous outside return, what this signals is the market is usually running out of steam. Okay, the momentum in the market, the momentum in the trend is normally slowing down, which means instead of getting these nice harmonic moves, strong bullish momentum trend, we're starting to get these pullbacks right down into the previous structure level. So it signals that the market's running out of steam, which means you normally only catch these opportunities at the end of the trend on that final push up, which causes a double top in the entire trend overall. So you normally get these moves on the end of the trend, so that final push up just before the market's about to roll over and start to reverse. So you might say, well, okay, so why are you so conservative? Well, the reason I'm so conservative is for that exact reason. If we're likely to run out of steam, I want to make sure that we're going to hold. I want a more conservative approach for that final push up, because there's a very good chance that we're going to see a rotation pretty soon, so I don't want to just end up entering aggressively and then finding that the market's running out of steam and momentum, and then we see a rollover. So I'm a bit more conservative. This is the least frequent opportunity. It normally signifies the end of a trend, so it's a good way to catch that final push up. As a trend continuation trader, I'm always looking for that final test of the high, and then we see a rollover. So, alright, so let's walk through this opportunity here on the pound yen. So you can see we've been putting in higher highs, higher highs, higher highs, and we're getting a pullback into structure. And what we're looking for is a pullback down into the initial kill zone, and we've marked out our kill zone, and we're looking at where we get a one-to-one risk reward, and we're looking for essentially the first chance entry and then the second chance entry in here. But if we just continue to push down and retest this low, we need to build out where we're looking for our entry into that third chance entry. And what I'm going to be looking at here is the lowest close to the lowest low. Okay, so this is my zone right here. So essentially my first chance entry is here. My second chance entry is anywhere in here that I get a higher close candle in this instance. But if we spike down and violate this low, then I'll be looking for that retest of structure on a lower time frame in this zone. So the test has to at least test this zone in here. So let's see what happens next. So you can see the candles push down. We don't get a higher close. And we continue down and bang, we close in this zone. So you can see right here that we've violated the previous low, but we haven't broken close below the low, but also we're in the zone that we're looking at. So the zone is going to be from here to here. Okay, so we can scrub this off. We're no longer looking for this, and we're going to be looking at this third chance entry technique. So now what we're going to do is we're going to drop down to the lower time frame. So this is the 4 hour, this is my swing trading time frame, and I'm going to be able to go down to the 60-minute and look for a double bottom, a valid double bottom entry, and then I'll be entering this as a double bottom. So let's drop down to the 60-minute time frame. Alright, so you can see now that we've dropped down to the lower time frame. You can see this is the zone we were looking at. We've tested that level. We've put in our initial test, and now we're just looking for a retest. We're looking for that double bottom entry. So let's see how market plays out. Boom, we get a double bottom right here. Okay, this is a valid double bottom because we tested the initial test low. So we're going to enter next bar market. Okay, so we're going to enter right here. We're going to take our targets up at a retest of the high based on the higher time frame. And our stop loss is going to be below this low, an ATR below the low, which is 20 pips at the moment. So we're going to be down at 48.80 plus whatever your front running your orders are. And then we're in next bar market. So what I'm going to do is I'm going to jump back to the trading time frame now and show you where the targets are going to go, and then we'll see what happens with this trade. Alright, so we're back on the trading time frame. We're going to get our orders in at a retest of these highs. Okay, so we're looking at, remember, the high, which we've got our orders set at. Our stops are very tight because they're based on an ATR below the low, and then we're in at next bar market. So now we can just see what happens with this trade. And looks like we hit targets there, and we've actually put in a new structure high. What I'd be interested to see is what actually happens after this move, because you can see we've pulled all the way back, and as I said, it normally signifies that we're running out of momentum, we're losing momentum and running out of steam, and we normally see some kind of relief or reversal even following these entry opportunities. So let's see what happens next. There you go, you can see we've violated structure here, which signifies a rotation, and we get a bit of a roll off. So as I said, this is the least frequent entry technique. It normally signifies the market running out of steam. Good for that last push up, for the retest of the highs, but I'm conservative for that reason, because I'm expecting a reversal at this point. So hopefully that's given you all the 3 different entry techniques. In the next video, I'm going to go over some tips and tricks and filters that you might want to pay attention to really be able to capitalize or maximize your profits, trailing stops and things like that. And also using filters to seek out the highest probability trading opportunities, or maybe if you're back testing, some filters you might want to pay attention to. So go out, check this one out, see if you can spot any of these opportunities at the end of a trend in particular, and I'll see you in the next video.
Alright guys, so hopefully you enjoyed that. You've now got all the rules that you need. What I'm going to be doing in the next lesson is giving you all the discretionary notes, everything I've learned trading it, little discretionary tweaks that I've made, things to bear in mind, and the way that some of our clients have tested this and are trading it now very profitably based on what they found. I'm really just going to give you in the next lesson transparency on how you go and make this your own now, and the dedication required to go and make this a truly profitable trading business out of this strategy. So I'll see you in the next lesson, but until then, don't forget to like and subscribe and share this video around. I'll see you then.